Hi everyone, so I've been asked to give my opinion on this Scottish Widows Pension Portfolio 2. Scottish Widows Pension Portfolio 2, Pension Series 2, might not be the exact same one, it must be pretty close. Name them usefully, don't they? So let's have a look at this and see how she's doing, shall we? And is it destroying your pension or not? Well, let's just have a look at it over, well, first of all, let's look at the last year, because it was an easy year. I mean, let's face it, when the NASDAQ goes up 55% and the S&P 500 goes up 25%, that's a bloody easy year, okay? And I don't necessarily expect you to beat that index, but you know, I expect you for my pension to be able to do something for it. Unless, of course, you're not investing in those stocks, which is fine, okay, which is fine. So let's have a look at what it's investing in, shall we? We go down here. Oh, okay. It's a fund which is charging me fees to invest in a bunch of other funds. That's fine. We'll dig a bit deeper. 28% goes into BlackRock's US Equity Tracker. Fine. BlackRock's ACS Climate Transition World Equity Fund. So basically, half the money's gone into American and climate transition. We'll look in those. I mean, look, it says US equities, 40% in US equities. Fine. So I expect, you know, last year it should have done pretty good. US equities 25 to 55% up, depending on S&P heavy or NASDAQ heavy. So how did they do in the past year? Let's have a look. How did they do in the past year? It's the light green one. That can't be right. It says 4%. I'm misreading something, surely. Okay, it really does say 4%. I'm obviously missing something. How can you be up 4% when the market just did that? Okay, fair enough. And they have got US equities, so where the hell, what US equities did they pick that? They're missing all of this. Okay, let's have a look at this ACS climate transition that they've put 16% in. Happily, I've got it up. Hang on, that actually has got those right stocks in. You know, I own Apple, Microsoft, Amazon, Nvidia, so they have got the right ones. How come they're delivering 4%? Okay, have they got Fujitsu doing their software? How the hell are they getting 4% when they've got the right stocks? I'll tell you. What they've done is, I mean, other than it's a fund of a set of funds, what they've managed to do during all of that period is, okay, 1/16 of your money is in these stocks, although I suspect some of it was in this. And by the way, how the hell Microsoft and Apple and Amazon are all climate transition? Come on, seriously, this is climate transition? Apple, Microsoft, Amazon, Nvidia? Do you know how much heat those bloody processors create, those graphics cards? Anyway, never mind, climate transition, no. It's a fund manager saying, what, you gave me climate transition? I don't give a shit. I'm going to still buy this stuff because I want to be a superhero, which is, he's bought the right stuff. It's just that 1/16 of your money and then 4% of 1/16 has gone into Microsoft. You know you could have just bought these directly yourself, don't you, and done. Well, you would have been close to 55% up if you just had those. By the way, if you just had, and you might, yeah, but I wasn't to know to buy those. No, that might be the case. But 4% and 55%, or 4% and 25% on the S&P, this is not good. This is, you know, if it was, look, if they did half as well, I might say, oh, all right then. But when they're not even bloody close, I mean, okay, who's taken the other 51% return? This stuff annoys me, sorry.